We're joined now by Daniel Morris. He is the chief market strategist and the co-head of investments of the Investments Insight Center, over at BNP Paribas Asset Management. Daniel, it's great to talk with you on this Friday morning. And so let's talk about what we've seen so far this week. We got that huge news out of Pfizer earlier in the week that really sent the market ripping. The reaction since has been a bit muted. We've talked a lot on this program about the rotation towards value, away from growth that we've seen. What have you made of this week's action? Because in the context of the rally we saw during the election, it's been kind of an odd and sort of a muted week here.
Well, if we think about the reaction, certainly to the vaccine news, I think we want to think about that as kind of a two-step process. So first, there was a question of, could we get a vaccine? Would it be this year? Would it be next year? Would it be after? Because you heard all types of opinions. So the first question that we got answered is, yes, we can have a vaccine in the reasonable near term. And I think that was the initial reaction that we saw from the markets. But then, of course, we immediately realized that raised now a whole host of new questions: efficacy, deliverability, timing, and everything else. So that's why I think you got that very quick snap in the market, because that first uncertainty had been taken away. But to get over those subsequent uncertainties, we know that's going to take some time, and really is going to be playing out probably over the next several months. So I think that's the context for the subsequently more muted reaction to the market. I think the other uncertainty, as we're all very much aware, is everything around the stimulus package. Again, timing, size, composition. So in a sense, we know less now, perhaps, than we did a month ago. And I think that uncertainty is what we're going to see in, at times, muted reactions from the market. But subsequently, I think we could also see a decent amount of volatility returning as you get news that either seems suddenly more positive or more negative.
Daniel, really a lot of comments yesterday from Fed Chief Jerome Powell when he spoke with the ECB. He noted it was going to be a challenging few months. And to me, that was an escalation in what he's been warning about for many months on the state of the economy. Do you think he's signaling that we are already in a recession?
We probably wouldn't go quite that far yet. We are expecting a downturn in economic growth in Europe, but that's because Europe, broadly speaking, has already reimposed restrictions, certainly not anywhere to the same degree that we saw at the beginning of the year, but they have. And you are seeing the near-term indicators already turning down, and we're expecting a modest dip in growth in the fourth quarter. In the US, not yet. If you think about what happened during the summer, even when we had our second wave, you didn't see a meaningful increase in restrictions. Clearly, the third wave is worse, and not surprisingly so, given that we're going into winter. So it would suggest that you are going to need to see additional restrictions at some point, but we're now halfway through November. So whether that's going to necessarily get you to the point that you have a contraction in activity in the fourth quarter, probably not. But I think the markets are going to focus on one hand, what any restrictions that come into place mean for near-term activity, near-term corporate profits, but at the same time thinking that, okay, at some point, nonetheless, those restrictions will be lifted. And if I think about the medium-term outlook, I'm actually still more optimistic than I was before.
So Daniel, so you don't think that investors then are being sort of too cavalier about the steady increase that we are seeing in cases still and some of the restrictions put in place?
Purely from a market point of view, not necessarily, because I think one of the lessons that we got from the third quarter in particular, if you look at earnings surprises, if you look at guidance, if you look at how quickly GDP snapped back. So after what were very, very restrictive measures in the second quarter, the economy came back. It didn't decline as much as people anticipated. So that tells us even if restrictions are imposed now, hopefully for relatively short duration, once they're lifted, people are very eager to get back to their previous lives, and the economy bounces back pretty swiftly. So in the short term, without question, it's going to be extremely challenging. But the equity markets really are trying to price out into the future. And from that point of view, it's fortunately not quite so bleak.